Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. It certainly appears that the bull market is back. The investors are liking what they're hearing about the economy. They're not too worried about inflation and interest rates continuing to rise throughout the rest of the year. So how should we be looking at this as investors? What sort of stocks should we be buying? There are three that I really like right now: Block, Coinbase, and General Motors. I want to highlight exactly why I like each of those stocks in this video. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and don't forget to check out my newsletter, Asymmetric Investing, below. A lot of great coverage on stocks like this. I want to start with Block, and let's look at some of their operating metrics. This is their most recent quarterly report. You can see that the Cash App is starting to be just a great business for them. 49% increase in gross profit year over year. Square up 16% year over year. This is the Square app. This is what businesses are using to process payments. So starting to be a very good business. Lots of profit coming out there. But the two of these together are really what makes this a formidable company, because they've got that consumer side with the Cash App and the business side with the Square app. Add them together and you have a great financial ecosystem. This is the number that has really turned positive over the last couple of years. Adjusted EBITDA, that's a proxy for cash flow. Net income includes things like stock-based compensation, amortization, and depreciation, so non-cash costs. You want to keep an eye on those, but adjusted EBITDA is showing that there's cash coming into the business, and so that's always good to see. I think at the end of the day, the reality for Block is there's just not that many companies that are focused on this digital financial experience. And that's what gives the company such great tailwinds. And now that they have both a growing business side and a growing consumer side, I just love their position. And I think this is a company that's going to be great to hold for 5, 10, 20 years in the future. The second one to look at is Coinbase. This may not be a stock for everybody. If you're not interested in the blockchain and what the technology that's going on there, this may not be a stock for you. But if it is, what I look at is what is subscription revenue at Coinbase. That's ongoing revenue that they're making from interest, from USDC tokens, from blockchain rewards, from all kinds of different sources of revenue, just not just from trading. And you can see that despite everything that is going on in crypto, subscription revenue has continued to rise over the past year. So that's really good to see. A lot of that is from the USDC coin, but this is a better revenue source than trading is for Coinbase right now. The other thing to keep in mind here is their cash. A ton of cash on the balance sheet for Coinbase, 5.5 billion at the start of 2023, and cash burn may not be as bad as you think. $5.326 billion in cash on the balance sheet as of the end of the first quarter. So great balance sheet. They've actually bought back some debt at a discount in the last couple of months. So as long as they can get through this crypto winter, which that's what this cash is for, if the blockchain does become a big business, a big technology that we're using, maybe it's in the background of finance or of gaming, this is going to be a valuable position to be in for Coinbase. I think there's more applications for blockchain technology than you might think, and this is absolutely a leader. That's why I like their position. Great balance sheet. They've just got to get through the next couple of years and see what that upside is. So a stock that I still really like right now. And the final one is General Motors. And one of the reasons I like General Motors is you're paying a fairly reasonable multiple for GM stock. Management is expecting $6.35 to $7.35 in earnings per share on an adjusted basis in 2023. They actually raised that last quarter. So as other companies were seeing margins fall, GM was actually seeing great margin and great demand for products like the Tahoe and Suburban. Auto free cash flow can be $5.5 to $7.5 billion this year. That's just a phenomenal number. But what I really like is the company's long-term opportunity, specifically in autonomous driving. This is the thing that caught my eye here. The Cruise business, that's the cars that are driving themselves all around San Francisco, Austin, and Phoenix right now, adding a couple more cities, Dallas and Houston, later this year. Management is expecting that to be a $50 billion business by 2030. So just 7 years from now, expecting that to be a $50 billion business. If that can happen, this could be a very high margin business and could really disrupt the auto business that we know today. I think this is ultimately the biggest asset that General Motors has on its balance sheet is it's about 80% ownership stake in Cruise. Now, Cruise is also making its way to GM vehicles with products like Super Cruise. But to me, this is the big upside for the company is if this Cruise business becomes a $50 billion business just 7 years from now, that's going to be a phenomenal business for General Motors to own, and I think is great for shareholders. Now, if this bull market continues, that means that people are going to be spending money on going out, on financial services. That's going to be great for Block. It means that the crypto winter may actually be coming to an end. That's going to be good for Coinbase, and it means that people are going to be buying vehicles. That's great for General Motors. So if this bull market does continue, those are 3 stocks that I think are going to do extremely well. Love to hear your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.